And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We're here to speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this video, be sure to hit the like button. It's right underneath. And if you've not yet done so, and I can't imagine why, please subscribe to my YouTube channel. So everybody's talking about inflation. It's the biggest thing that's out there, right? In the United States right now, inflation is running hot. It's running at around 8.5%, something we haven't seen in over 40 years. Okay. What do you do, or what shouldn't you do, I'd rather say? What's a big mistake to do if you've got some money and we're living in a period of high inflation? Now, I want to make one caveat. If you need your money in a year, or you need your money in 2 or 3 years, maybe even, then that's not what I'm talking about here. Okay? I'm talking about somebody who's got money for the medium to long term. Okay. As I said, in the US, but everywhere throughout the world, right, with supply chain issues and some bad, oh, go figure, bad government policies all over the place. Well, that's a shock. Prices are surging, not just energy prices. It could be food prices, you know, everything out there, car prices, everything is getting expensive. So what should you do? Okay. If you've got money, like I said. So the first thing you should do, this is number one, don't put medium and long-term money in the bank. Why is that? Well, because right now, let's say you're getting 0.01% on that deposit. Okay. And inflation, let's say, is 6% annually, just for an example, 7% annually. What does that mean? That means you actually lost, in the case of 6%, you lost 5.99% of your money. Okay, so that's bad. Now, I realize that, you know, there's CDs and things like that, but none of them are even remotely close. Or bonds, right? You can get a 1-year bond right now, an investment grade bond, let's say at around plus minus 2.25%, 2.5%, let's say annually. That still means you're going to be giving up 3 to 4% of the value of your money. Okay, so what should you do? Now, people are going to say, Katzman, you're a lunatic. I get that all the time anyway. Okay, what you really want to do is like do with people like Warren Buffett or Kevin O'Leary say, right? These are professional investors, and they say, he says, I'm not saying you have to do it just like they say, but they say put money in index funds. Okay, put money into an S&P 500 index fund. Again, past results are no prediction of future returns, but traditionally, the S&P 500 has outpaced inflation, even when markets are dropping. Okay, investors should stay the course and urge the temptation to sell. Recently, and I quote, a JP Morgan analysis found that the 10 best days for the market since 2002, so we're going back 20 years, happened after sharp declines, including the 2008 financial crisis and the 2020 market crash at the start of the pandemic. If you invested $10,000 in the S&P 500 at the beginning of 2002, you would have more than $61,000 at the end of 2021. Okay, drop that down to like, you know, $56,000 or $57,000 now. If you held all your investments versus $28,000 and change if you missed the market's 10 best days. Okay. Now, again, for your regulators out there, past performance doesn't predict. Is no prediction of future returns. That we got it, right? But if you've got medium to long-term money, keeping your money invested in a bank deposit now when inflation is surging is just a bad idea. Of course, like I said, there are other things that you do need. If it's an emergency fund, if you're buying a house or an apartment in the next, you know, less than 24 or 36 months, you just need that money on hand, right? You can't take the risk that comes with investing in stocks. But if you have more of a medium or longer term horizon, it's almost foolish to keep your money in the bank, especially after the market's already dropped, right? Then your chances of profiting over the longer term certainly increase, right? So again, to recap, if it is that you've got money for the medium or long term and it's sitting in a basically 0% or even in a CD for a year, right? Making 1-2% if you're lucky, right? The deposits are paying 0.01%. And inflation is significantly higher than that. Just keep in mind, you're losing money. And that's something people don't always understand. Well, I made 2.5% of my money. Well, no, you didn't exactly, because when you go to the supermarket and you try to pay with that 2.5%, you are going to still have products in your shopping cart because you're going to run out of money. Okay, so keep that in mind. You've been tuning into the Aaron Katzman Show, where we speak to you about your life, your money, and your investments. Be sure to like this video if you did like it, and tell your friends, and be sure once again to subscribe to our YouTube channel. That's all here. How do I do this? Below, right? Subscribe, like, okay? Thanks so much for tuning in, and we'll speak to you soon.